please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now, Reliance Industries has released its annual report. In a letter to shareholders, Chairman Mukesh Ambani lists out ambitious targets. One of them includes raising profits of the consumer businesses to the level of energy businesses over a decade. Kevin Lee, who scanned through the report, joins us now to take us through the key highlights of this annual report. Kevin, take it away.
Well, RIL Chairman Mukesh Ambani very pleased with the company's performance. This is the beginning of the company's golden decade. It will become 50 years old in FY28. And Mukesh Ambani thinks that this has been a spectacular start to that golden decade. Reliance Industries became the first Indian company to have an EBITDA of over $10 billion this year. Key concerns that Mukesh Ambani highlighted were growing protectionism and geopolitical tensions in the Asian area. Talking about the refining and marketing business, that business recorded an EBIT of 25,869 crores, which is a record level. The GRMs are at a 9-year high of $11.6 per barrel. Coming to the oil and gas business, Mukesh Ambani admitted that there were some concerns in the US business, which is the shale gas operations, and said that the plan is to invest 40,000 crores in the Krishna Godavari D6 block over the next 3 to 5 years. Of course, this will be done with a JV partner. Talking about Jio, Mukesh Ambani said that he was very pleased. Jio has about 186.6 million customers as of the end of FY18. And the future of Jio, which is going to be fiber to home and Internet of Things, these trials have started. They're in the beta phase, and that could play a big role in Jio's growth over the next year. Talking about the retail business, which is the important thing, as you mentioned, Mukesh Ambani said that the consumer business will contribute on par with the energy business by the end of this decade. So that's a big forward-looking statement coming in from the RIL chairman. Also, the retail business has been growing at a CAGR of 45% over the last 5 years. So an upbeat, optimistic statement coming in from the RIL chairman.
Oh yes, a big statement coming in from the RIL chairman regarding the growth of the consumer business there. But let's move on. Faced with one of the worst operating ratios in history, the Railways has sent an SOS to the Finance Ministry. Now, Railways is asking North Block to absorb its pension outgo worth 47,000 crore rupees. Ashpreet Sethi is here with more on this exclusive story. Ashpreet, what led to such a deterioration in Railways finances, and what does it mean? What does it actually want from the North Block now?
Definitely one of the worst years for railway. If you look at the operating ratio, we're bringing you an update as to how the Railway Ministry has written to the Finance Ministry saying, take the pension debt that we have, take that burden from us, because our operating ratio will be the worst because of pension burden. Now, what we pick up from sources is that the Finance Ministry has been approached for the second time by the Railway Ministry to go ahead and take over the pension burden. Remember, earlier it was sent right after the budget when it was turned down by the Finance Ministry. However, now again a letter has gone from the Railway Ministry saying, pleading rather, please take over the amount as far as the whole pension liability is concerned. Now, the operating ratio, of course, will be at 98.5%. This is the worst compared to 2000-2001 when it was 96%, and it is more than the revised estimate of 96% that the railway had targeted. Now, as far as the pension outgo is concerned, that is about 74,000 crore rupees. That is about 66% of the railway's expenses. Now, it also means, what is an operating ratio? It means that the railway spends over 98 paisa to earn a rupee. So it means that they are actually earning nothing from here. Now, as far as other issues are concerned, of course, 22,000 crore per year, that's the kind of outgo as far as pension liabilities is concerned. That is what Railway has told the Finance Ministry. As far as more issues are concerned, of course, Railway is going ahead and saying that about 47,000 crore rupees is going towards 4 lakh retired employees. Remember, the retired employees database will increase now because last year itself, many employees have reached above the 50-year age as far as that is concerned. Now, they are, of course, telling the Finance Ministry things will get worse if you do not take over the burden. Freight and passenger revenue that has been coming for the railway hasn't been doing well as far as reviving the whole railway sector is concerned. Remember, their share has also decreased because of the revenue that they used to get from asset monetization, which is now going to the Finance Ministry. Also, as far as PSUs are concerned, the dividend is also going to the Finance Ministry. So they're not really getting the kind of money they require as far as revival of the sector is concerned. So we'll have to wait and see what happens at that end, because remember, the Railway Ministry will be looking for a response from the Finance Ministry, because as we will show you next in the slide, the operating ratio, of course, has been worse as far as this year is concerned. Look at the slide here, 93% in 2013. 2015, it got better, about 90%, and now it's 98.5%. So now it remains before the Finance Ministry as to what will be the next.
All right, so we will keep an eye out on that. But with that, let's take a short break. Come back, we get you a check on the cues to watch from the futures and options space. Well, if you were hoping for some recovery in the Asian markets, seems like that hasn't come by. In fact, the Asian markets have extended their cuts and currently at the low point of the day, primarily on account of the weak cues coming in from both Hang Seng as well as Shanghai. Hang Seng's open close to 300 points lower, the Shanghai index to almost 1% in the red. The Nikkei, when we started the show, was mildly in the green, absolutely unchanged. It has now lost about 1/5 of a percentage point. And as far as the other indices are concerned, there too, they are at the low point of the day, including the Korean index, which is down about 0.6%. The SGX Nifty at the start of the show indicated a cut of close to around 40 points and now indicating a cut of close to 65 points around that 10,700 mark. So that is something we really need to keep an eye out on what happens as far as the open for our markets are concerned. But let's shy away from equities at this moment and let's get in what's happening in the commodities arena. Manisha Gupta joins in with all the updates from there. Morning, Manisha.
Morning. Hi. You know, the decline in Asian equities will hamper many of these commodities as well, because the base metals especially were taking cues from the world stocks at a 3-week high, but that clearly hasn't, translated for the Asian equities right now. So that is going to be one thing. But on the other side, the individual fundamentals are quite strong. The copper prices are trading at a 4.5-year highs. This is after the supply concerns are arising out of the Escondida mine, where the union leaders have now put their wage demands in front of the management there and are awaiting some kind of communication. So until then, there is going to be further hike coming in for the copper prices. We also have seen 6% gains in copper in this week itself. And if the strike does go through, then you are perhaps looking at yet another 10% gains easily. The other metal that is doing extremely well for itself is nickel. The annual demand growth is expected to continue in double digits until 2025. We already have seen a deficit in this year in case of nickel, and that is what is adding to premium to prices. What also has seen strength come back is the crude oil prices, back around that $77 per barrel mark. This is on the back of Venezuela exports, which have been declining. Algeria oil minister has said that the OPEC will focus on balancing the market rather than adding further supplies to the market. So that has turned back the market, and you have seen funds actually go long yet again in case of the crude oil prices.
All right, Manisha, thanks a lot for that. We will watch out for the crude prices as well, especially given the consumer sentiment. But however, for the last 10 days, petrol prices have been cut in excess of ₹1 cumulatively. But let's shift focus back to the F&O space, then the equities markets. In yesterday's trading session, while we moved higher, we saw some purchase come by in index futures from the FIIs. They bought about 101 crores in index futures. The big number, of course, was from index options, close to 7,330 crore worth purchase in index options. Remember, this was also exaggerated because it was the Nifty Bank options expiry in yesterday's trading session, and we saw a sharp amount of volatility in the last hour on the Nifty Bank itself. So in terms of internals, what propelled the FIs to buy about 7,000 crores in index options was the fact that they covered a lot of shorts, close to 28,500 shorts covered in index calls, as well as 10,900 longs added in index calls. A large part of that can be attributed to the Nifty Bank as well, but by and large for the Nifty, there was some short covering. Where were the shorts covering their positions? 10,700 call, as well as the 10,800 call, which shared about 4 lakh shares in open interest. The 10,700 put saw a lot of writing, so that means there is some support, especially at the levels of 10,600, given the premium on the 10,700 put is close to around that ₹87 mark. Remember, the 10,600 put has close to 43 lakh shares in open interest, maximum open interest there, which has moved higher from 10,200, which indicates that there is a strong base support out there. In terms of stocks, watch out for the metal space that outperformed yesterday. So we saw some longs being added on sale, as well as Tata Steel, and fresh shorts on Strides, which was down in yesterday's trading session.
Okay, Mangalam, thank you so much for that. But with that, it is curtains down on this edition of Power Breakfast. From the team and myself, thank you so much for watching. Bazaar Morning Call comes up next.